Most people think that if a financial video has millions of views, official-sounding government forms, exact dollar amounts, and references to Congress, it must be based on real legislation. But the reality is that some of the fastest-growing finance videos online are convincing not because they're accurate, but because they're incredibly well-written. If you're a homeowner born in the 1940s, 1950s, or 1960s, chances are you've seen the viral video claiming that Congress quietly changed property tax rules based on your age. According to the video, homeowners born before 1970 could qualify for automatic property tax freezes, new federal exemptions, special assessment caps, and thousands of dollars in savings simply because of when they were born. It sounds like the kind of news that could change someone's retirement plan overnight. And that's exactly why millions of people have clicked on it. But here's the question almost nobody asks before sharing the video. Did Congress actually pass a nationwide law changing property taxes by age? That's what we're going to answer today. By the end of this video, you'll understand how property taxes really work, why this claim spread so quickly, what parts of the story are true, what parts aren't, and most importantly, how to find legitimate property tax savings that may actually be available where you live. Because here's the reality. Property taxes have become one of the fastest-growing expenses for many American homeowners over the last decade. Even homeowners who paid off their mortgages years ago are opening tax bills that seem higher every year. For retirees living on Social Security, pensions, or retirement savings, that increase isn't just frustrating, it can directly affect monthly cash flow and long-term financial security. So when a video promises hidden tax relief that supposedly applies to millions of homeowners, people naturally pay attention. The interesting part is that the viral video's popularity isn't built entirely on fiction. It mixes together real financial concerns, real government programs, and familiar tax terminology, with claims that don't accurately describe how the U.S. property tax system works. That's what makes it difficult to evaluate. When something contains a few true statements, it's much easier to believe the rest without checking. Let's start with the biggest claim. The video suggests that Congress quietly changed property tax rules for homeowners based on whether they were born in the 1940s, 1950s, or 1960s. If that were true, it would affect tens of millions of homeowners across the country. It would be one of the biggest property tax changes in modern history. It would impact counties, cities, school districts, and state tax systems nationwide. So naturally, the first question we should ask is this: who actually controls property taxes in the United States? The answer surprises many people. Unlike federal income taxes, property taxes are primarily administered at the state and local level. Your county assessor determines the assessed value of your property. Your local governments, including counties, municipalities, and school districts, typically determine the tax rates applied to that value. State legislatures establish many of the rules governing exemptions, assessment limits, and relief programs. That's why property tax systems can look completely different from one state to another. A homeowner in Florida may qualify for benefits that don't exist in California. A homeowner in Texas may face a different assessment process than someone living in Illinois or New York. This isn't because one state is doing something wrong. It's because property taxation has traditionally been a state and local responsibility. That's an important piece of context because it helps explain why sweeping nationwide claims deserve careful scrutiny. If Congress truly created automatic property tax freezes or assessment caps based solely on your birth year, those changes would require extensive coordination with state and local governments. They would likely receive broad coverage from tax professionals, state agencies, county assessors, and major news organizations. Instead, the viral video presents the changes as though they quietly appeared inside a spending bill that almost nobody noticed. Whenever you hear claims like that, it's worth slowing down, not because unusual legislation is impossible, but because extraordinary claims deserve verification. Now, let's be fair to the video's underlying message. There is a real issue that millions of homeowners are dealing with today. Home values have risen substantially in many areas over the past several years. In many jurisdictions, higher home values can lead to higher property tax assessments. Although the exact relationship depends on local laws and assessment practices, at the same time, many retirees have seen their living expenses increase because of inflation, housing costs, insurance premiums, utilities, healthcare expenses, and property taxes all compete for the same retirement income. That financial pressure is real, and it explains why videos promising tax relief resonate with so many viewers. But this is where careful analysis becomes important. A genuine financial problem doesn't automatically make every proposed solution accurate. In fact, some of the most widely shared financial misinformation begins with a completely legitimate concern. The solution, however, is often exaggerated or entirely fabricated. So rather than asking whether the viral video feels believable, let's ask a better question: what legitimate property tax relief programs actually exist? The answer is encouraging. Across the United States, many states and local governments already offer programs designed to reduce the property tax burden for qualifying homeowners. Some provide homestead exemptions, some offer relief for seniors, others have programs for disabled homeowners, veterans, surviving spouses, or households meeting specific income requirements. Certain jurisdictions allow eligible homeowners to defer property taxes under particular conditions. Many also provide formal appeal processes if a homeowner believes the assessed value of their property is too high. The important point is that these programs are not identical across the country. Eligibility depends on where you live, your personal circumstances, and your state's laws. That's a very different picture from the one presented in the viral video. And it's also why understanding the real system can be far more valuable than chasing claims that sound too good to be true. In the next part of this video, we're going to examine the biggest claims from the viral transcript one by one. We'll separate fact from fiction, explain which programs actually exist, and show you how to verify whether your own property tax bill could legally be reduced under the rules that apply where you live. Now, let's examine the claims that made this video spread so quickly. The first and biggest claim is that Congress divided homeowners into three groups: those born in the 1940s, 1950s, and 1960s, and created different property tax rules for each generation. On the surface, that sounds incredibly specific, and psychologically, specificity creates trust. When people hear exact birth years, exact percentages, and exact filing deadlines, the information feels official. But this is where it's important to separate confidence from evidence. When tax professionals evaluate a new law, they don't start with YouTube. They start with the actual legislation, IRS guidance, state tax agencies, and county assessor offices. Those are the sources responsible for administering tax laws. After reviewing the available information, there is no nationwide federal law that automatically freezes property taxes for everyone born before 1950. There is also no federal law creating a universal 3% assessment cap for homeowners born in the 1950s, or a nationwide property tax deferral program based solely on being born in the 1960s. That doesn't mean every idea mentioned in the viral video is completely fictional. In fact, many of the concepts are based on real programs that already exist in different parts of the country. For example, many states have homestead exemptions that reduce the taxable value of a primary residence. Others offer senior property tax freezes, but the eligibility rules vary dramatically. Some states require a minimum age, others include income limits. Some require annual applications, while others renew automatically once approved. The important point is that these programs are created by individual states, not by a single federal law. Applying to every homeowner in America, this is where many viewers become confused. If someone in Texas says they receive a senior property tax freeze, that may be completely true. If Someone in another state says no such program exists where they live. That may also be true. Both people can be correct because they're talking about different state laws. That's one reason why property tax advice should never assume every homeowner follows the same rules. The viral transcript also mentions several official-sounding government forms, including forms with names like 1098SR and 5405S. Here's why that's worth discussing. Government forms usually have standardized numbering systems. The IRS publishes official forms, instructions, and updates every year. If a brand new nationwide tax form were created for millions of homeowners, tax software companies, accountants, CPAs, financial planners, and tax preparation services would all update their systems almost immediately. When independent researchers searched for these specific forms, they found no evidence that they exist as described in the video. That's an important reminder that official-sounding names don't automatically mean something is official. Another claim that attracted attention was the promise of automatic enrollment. The video suggested that millions of homeowners would automatically receive property tax freezes without filing paperwork. It's an appealing idea because everyone likes the thought of receiving benefits without having to apply. In reality, automatic enrollment depends entirely on local law. Some jurisdictions share information between government agencies and can automatically apply certain benefits. Others still require homeowners to submit applications along with proof of residency, age, disability status, military service, or income. Again, there is no single nationwide rule. This is where most homeowners accidentally leave money on the table, not because they missed a secret federal program, but because they never checked what their own state already offers. Now let's talk about another reason this viral story spread so rapidly. It uses what behavioral economists call a loss aversion message. Instead of saying, "You might save money," it says, "You're already losing thousands of dollars if you don't act immediately." Our brains naturally pay more attention to avoiding losses than achieving gains. That's why headlines promising hidden benefits or urgent deadlines generate so many clicks. But urgency should never replace verification. Financial decisions involving taxes, retirement, or homeownership deserve careful review. Here's another point that rarely gets discussed. Even when legitimate tax relief exists, the amount of savings varies enormously depending on where someone lives. Imagine two homeowners with houses worth exactly $400,000. One may live in a state with relatively low property taxes. Another may live in a county where local tax rates are significantly higher. Even if both qualify for the same percentage reduction, the dollar savings could look very different. That's why generic national estimates can sometimes create unrealistic expectations. What matters is your local assessment, your local tax rate, and your state's eligibility requirements. There's also an important difference between an assessment and a tax rate. Many homeowners use those terms interchangeably, but they're not the same thing. The assessment is the value assigned to your property for tax purposes. The tax rate is the percentage applied to that assessed value. Lowering either one can reduce your bill, but different states use different methods for determining both. Understanding that distinction helps explain why property tax systems are often more complicated than they first appear. This is also where strategic homeowners begin separating themselves from reactive homeowners. Reactive homeowners often spend hours searching for nationwide loopholes that don't exist. Strategic homeowners spend that same time reviewing their actual assessment notice, comparing nearby property values, checking state exemption programs, and contacting their local assessor if something doesn't look right. One approach is driven by headlines. The other is driven by facts. Over the course of 10 or 20 years, those different habits can produce meaningful financial results. Because while there may not be a hidden federal property tax law waiting to save thousands of dollars overnight, there are legitimate opportunities that many homeowners overlook every year. And those opportunities begin with understanding the rules that actually apply where you live, not the rules someone on the internet claims should apply. In the final part of this video, we'll focus on exactly what homeowners can do this week to potentially reduce their property tax burden legally, how to review an assessment before it's too late, and the 5 practical steps that can make a real difference over the long run. So after hearing all of this, you might be wondering what the practical takeaway is. If the viral claim isn't accurate, does that mean there's nothing homeowners can do? Actually, the opposite is true. The biggest mistake homeowners make isn't missing a secret federal program. It's assuming their current property tax bill is automatically correct and that there are no opportunities to reduce it. The reality is that many people continue paying more than necessary simply because they never review their assessment, never ask questions, and never check which local programs they qualify for. If you're a homeowner, there are 5 practical actions you can take this week that are based on real processes, not internet rumors. The first is to review your most recent property tax assessment notice. Most homeowners glance at the final tax amount and move on, but the assessment itself deserves just as much attention. Look at the assessed value of your property, compare it with recent sales of similar homes in your neighborhood. If that information is publicly available, ask yourself whether your property's characteristics, such as square footage, lot size, number of bedrooms, or condition, are recorded accurately. Simple errors sometimes happen. Correcting those errors can affect future tax bills. The second step is to visit your county assessor's website. Every county has different rules, but most publish information about exemptions, assessment, appeals, filing deadlines, and eligibility requirements. Don't assume you don't qualify. Read the requirements carefully. Programs often exist for primary residences, senior homeowners, veterans, disabled individuals, surviving spouses, agricultural property, or other specific situations. Even if an exemption saves only a few $100s each year, those savings compound over time. Think about it this way: saving $500 annually over 10 years is $5,000, before considering what that money could have earned. If invested, small financial improvements repeated consistently often matter more than dramatic one-time events. The third step is understanding the appeal process. Many homeowners don't realize that assessments can often be challenged if they believe the valuation is inaccurate. An appeal doesn't guarantee a reduction, but reviewing your assessment and understanding your rights is simply good financial management. Deadlines are important. Missing an appeal window could mean waiting another year before requesting a review. The fourth step is organizing your financial documents. If you qualify for local exemptions, you'll often need documentation proving residency, ownership, age, disability status, military service, or other eligibility requirements. Keeping those records organized makes the application process much easier. It also prevents unnecessary delays if additional documentation is requested. The fifth step is something that's easy to overlook. Build property taxes into your long-term retirement planning. Many people focus almost entirely on mortgage payments while working. Then they enter retirement expecting housing costs to fall dramatically. But property taxes, insurance premiums, maintenance expenses, utilities, and repairs continue long after the mortgage disappears. Understanding those ongoing costs helps create a more realistic retirement budget. This brings us to an important distinction. There are really 2 types of homeowners emerging today. The first group reacts to headlines. When a viral video promises thousands of dollars in hidden government benefits, they immediately begin searching for forms, deadlines, and shortcuts. The second group takes a slower approach. They verify information, they read official guidance, they understand how their own state and county operate, they make financial decisions based on facts rather than emotion. At first, those 2 approaches don't seem very different, but over 10 or 20 years, they produce very different outcomes. The homeowner who consistently reviews assessments, claims legitimate exemptions, appeals inaccurate valuations when appropriate, and stays informed about local tax changes is more likely to avoid unnecessary expenses. Those savings don't happen because of one lucky discovery. They happen because of repeated attention to detail. And that's one of the biggest lessons in personal finance. Financial security rarely comes from finding one hidden opportunity. It usually comes from making dozens of informed decisions over many years. The same principle applies to investing. It applies to retirement planning, it applies to debt management, and it certainly applies to homeownership. Small advantages accumulate, small mistakes accumulate too. That's why it's so important to distinguish between information that feels convincing and information that can actually be verified. The internet has made financial education more accessible than ever before, but it has also made misinformation travel faster than facts. As homeowners and investors, our responsibility isn't to believe the first explanation we hear, it's to ask one more question: can I verify this? That simple habit may protect your finances more than any viral tip ever could. If you're in your 50s or 60s, this is an excellent time to review your entire housing strategy. Think beyond this year's property tax bill. Consider future maintenance costs, insurance premiums, healthcare expenses, retirement income, and whether your current home still fits the lifestyle you expect over the next 20 years. If you're already retired, remember that managing expenses can often have just as much impact as increasing income. Every dollar you legally save on recurring costs is a dollar that stays available for healthcare, travel, family, or simply greater peace of mind. And if you're younger, perhaps in your 30s or 40s, so there's an important lesson here as well. Understanding how property taxes work before buying a home can help you make better long-term decisions. The purchase price is only one part of the cost of homeownership. Annual property taxes can vary dramatically between neighborhoods, counties, and states. Planning ahead today can prevent unpleasant surprises years from now. So while the viral claim that Congress quietly changed nationwide property tax rules by age doesn't hold up under careful review, the conversation it started points to something genuinely important. Millions of homeowners would benefit from understanding how their own local property tax system works. Knowledge remains one of the most valuable financial assets you can build, not because it guarantees perfect outcomes, but because it helps you make better decisions consistently over time. I'd love to hear from you. Had you ever successfully appealed a property tax assessment, or claimed an exemption that reduced your tax bill? Or have you seen one of these viral videos and wondered whether it was true? Share your experience in the comments below. Your insight could help another homeowner avoid confusion or discover a legitimate opportunity didn't know existed. And if you enjoy clear, research-based explanations about retirement, taxes, Social Security, housing, and personal finance, consider subscribing. New financial rules, economic trends, and tax changes happen every year. The goal of this channel isn't to create panic or chase headlines. It's to help you understand what actually matters so you can make informed financial decisions with confidence. Thanks for watching, and I'll see you in the next video.